Well, let's take a little bit of a detour on Market Fatafat and connect with the management of PFC. There's been high quality asset quality stress this quarter. NIMs under pressure. Profits have though come in at 936 crores versus a loss. That is Mr. Rajeev Sharma, Chairman and Managing Director, standing by. Thank you so much for joining in on ET Now. Well, to begin with, the net interest income and profits have come under a little bit of pressure. Can you tell us what that can be attributed to?
As you know, there is some stress in the sector, and my loan book is 2,80,000 crores, out of which 82% is government utilities and 7% private sector is also perfect. We don't see any financial stress there. Remaining 11% are projects which are stressed, and we are trying to address that stress in different projects differently. Recently, 12th February circular of RBI, though it was not applicable to NBFCs, but as a responsible and prudent corporate, we have implemented this. Because of this, about 12,000 crores projects we have to classify as NPA. That's why we are not booking income on those projects, and that's why that total income has come down and profit in the last quarter has come down.
Overall, what's your guidance for the FY19 gross NPAs? What is the incremental provision that you think you can maintain?
So different projects we are handling in different way. We have a different strategy, but we are making sincere efforts. Just to bring to your notice that we have revived 3 projects, Dense Energy and Siga Energy. These are hydro projects in Sikkim. One is 96 megawatt, another one is 97 megawatt. They got PPA with Haryana government with our sincere efforts of our management, and now they have started supplying power to Haryana. Similarly, Ratle hydro project in J&K, we have had deliberations and dialogue with GVK Power, with their developed promoters, and we have been able to resolve that also. 11 crore per month they are paying to us, and final settlement agreement is to be signed within 15 days.
Exposure to NCLT cases, and can you tell us what is the kind of provision that you have towards NCLT?
Actually, some projects have already gone into NCLT. About 8,000 crores projects have already gone, and at this juncture it will be very difficult to assess that how much haircut will be there. But as and when we approach there, we will be trying to get the best possible price depending on the quality of assets and whether the project is having PPA or not, whether the project is having FSA or not. So there are, and 38% provisioning in these projects have.
Margins too have come under pressure due to the interest reversals. Do you think that your net interest margins can improve from the current 3.85%?
Cost of fund last year we have been able to reduce by 36 basis points, and margins we will be able to maintain. This year our interest spread was 2.77%. I expect 2.5 to 2.6% is interest spread this year also.
All right, we wish you all the very best. Thanks much for joining in and giving us a view on the quarter gone by as well as the outlook going forward. 80 is where the stock is currently at.